All right, today we are talking about tax deed investing. So, in the last episode, in the last series, so this is going to be a series of episodes where I talk about investing, the best investment strategies for you, how you can invest and where you can invest, and how you should invest. But, however, ultimately, this is not financial advice. This is just recommendations of things that I've learned, things that I'm doing to really just expand my portfolio, become a better steward of my finances, and become a generational wealth provider for my family. So last time I talked about tax liens. Today what I want to talk to you is going to sound very similar, but it's tax deeds. So how do you harness the power through tax deeds, right? Now, a deed is it's almost like a contract to a property, right? So when you buy a car, you get you get a deed if you pay for it in full, right? You get a format that shows that you have ownership. So buying a tax deed gives you ownership of the property. However, it's very unique to understand the differences between tax deed and tax liens, right? So again, this is the second installment of this series, and I want to just talk to you about just different types of wealth strategies to really improve your arsenal when it comes to building generational wealth. So let's jump right in. So in the last series, what I talked about when I said when I talked about tax liens, what I was talking about is really leveraging the power of your return on investment, right? Where the tax lien strategy is different from the tax deed is that the tax liens, you buy a lien on a property with the intent and mindset that lien will be paid because that person doesn't want to lose their property, and then in turn you get a return on your investment. So your goal in the tax lien investment strategy is focusing on your return on investment. The second thing that we're talking about today, which is the tax deed, is actually you buying a deed so that you can own the property. Now, why is this important to you? If you want to understand the importance of this, like, again, the county's main source of income is taxpayer dollars, right? And so one of the things that they could have done is they could have just decided to raise taxes for the taxpayers, which sometimes they do. But they came up with this clever system. This system was to cover the taxpayer deficits by liening their properties, right? By putting a tax lien on their property. Now, everybody isn't financially aware of what this means, but if there's a lien on your property, and let's say you are to foreclose, right, on your home, what happens is the person that has that first lien, that tax lien, it becomes the first lien position. They have the right to be the first person to get the right of refusal to purchase the property, which is why tax deeds are so powerful. Tax deeds mean you have the deed to the property and somebody has to pay you for the deed to get that property. Where in the tax liens, all they're focused on is paying the taxes and the penalty. Okay, when it comes to tax liens, what they're doing is you're paying the taxes and then the penalty. So let's get really deep into the tax deeds. Now, tax liens are very different, very similar but different, right? Investors come in and they try to buy a property. So what is the biggest difference between the tax deeds? Now, approximately half of the U.S. sells tax liens and half sells tax deeds. These deed systems are a little bit different than the tax liens, right? But they offer amazing opportunities for investors, right? The primary difference between the tax liens and the tax deeds is the point of where the county allows the investor to come into the picture. The tax liens, you can buy it at the very beginning. Tax deeds is right before it goes to auction or after the auction. So that means the property has already went, nobody wants it, and you can buy the deed. So in 2021, the delinquency rose dramatically, and so the tax lien certificates are something that's very interesting, and you need to understand. So in a typical tax deed state, so I talked about half the U.S. being in tax liens and tax deeds. Half in a tax deed state, the county will issue the tax lien against the property, in 2022, similar to tax lien states, but instead they sell the tax lien certificate for the amount that is owned on the property. Then they hold that tax lien and wait for the property owner to pay the delinquent property taxes. Now, if they redeem it themselves, great. The county will then hold that lien, if not paid, until the penalty is incurred. Now, the county will then begin what's called the foreclosure process. When this starts to happen, this is where you come into the picture. So before the county files the deed, basically once they file a deed, that means you take ownership of the property. So that's when they go into the tax deed sale in a public auction. So the tax deed is typically at a public auction, or right after the public auction. So that's something that's really important for you to understand. So the starting bid for the tax deed is typically the original delinquency cost plus the amount of interest that's been incurred, any fees and any penalties to date. Now, all of that money goes to the county so that they actually get their money back. They're not trying to make money, they're just trying to break even. However, the difference is that when you start the bid, when you get the final bid, what's called, if you go above what's owed, that excess amount of money is a unique opportunity for the investor to take advantage. This is where you can, all that money that's paid above the asking price, you can actually recoup that or encourage the owner to come in and get that. Any money that's paid above the penalties, the owner can come in and get that money back, which is really profitable for them. Not profitable, but it's a very good thing for them to get some money out of the deal without losing all of it, right? So why is this important? I'm going to share 10 benefits for you to actually understand the importance of tax deeds, right? So first, you get full ownership of the property. So unlike tax lien investing, when you hold a lien on the property, tax deed investing provides you full ownership outright of the property. This means that you have the ability to control, develop, sell the property, or do as you see fit. The second benefit is the potential bargaining price. Now, most properties, when you buy it at a deed, you get it at a very reduced price. So this is very good because you can get a good property at a relatively low price, and sometimes you have to make an investment to upgrade the property or improve the property, because if it's in a deed state, that means that it's probably not inhabited, it's probably not with people in it, and you need to basically fix it up. So be mindful, because this is something that you need to be very aware before you buy a tax deed property. The third thing is the diverse range of properties that you can get. You can get land, you can get single family, you can get multifamily, you can even get apartments. But really, this can give you a wide variety of properties that you can purchase at a very low risk. The fourth thing is understanding that you will have favorable legal protection. When you do a tax deed auction, they're typically conducted with restricted adherence to legal guidance. So you have to be part of this legal process, right? The process ensures that the property title is clear, which is reducing the risk for you to have any legal issues down the road. So when you purchase it, there's some fees that are coordinated, and then all of fees are calculated into the price. And then they make sure that the title is free and clear for you so that you don't have any legal issues down the road. That's super important. The fifth thing is the potential for appreciation. Most properties, when you buy them, even if they're not a great state, once you fix them up, the property value goes up tremendously. So whatever you pay is very minimal to what you will get on the back end. Exit strategies. This is number 6. One of the things that I really want you to understand is there's multiple exit strategies. As a tax deed investor, you have multiple exit strategies at your disposal. You can fix and flip. You can turn a quick profit. You can turn it into a rental home. You can sell it at a higher price in the future. There's multiple exit strategies. And exit strategies means that you're just not holding on to that property, okay? Number 7 is mitigating the competition. Now, comparing to traditional real estate markets, tax deed auctions offer they have a very few participants, so a lot of people don't go to the auctions, and this can mean less competition and more opportunities for you to get prime real estate. Really, that's really the bottom line. Mitigating that and and just not having competition in there, because that's really important. The eighth thing, and I talked a bit about this in tax lien investing, but with tax deeds, you also diversify your portfolio, not just the tax liens, but you now integrating some deeds into your investment portfolio. Now you have stuff that you can hold, you can sell, you can, fix and flip, like I said before. But this diversifies your portfolio, so you have multiple streams of income in a variety of ways. The ninth thing is understanding and becoming familiar with your local market. This gives you a benefit because you understand where the properties are valued higher, what things are looking like, what the market looks like, and this will really help you become a very savvy and educated investor when it comes to your market. The last thing is wealth building potential. When you buy deeds, you are invested in a long-term outlook, right? You are making a significant wealth building strategy, and over time, having a very well-managed portfolio just really ultimately helps you become a generational wealth holder for you and your family. And I really hope that you are taking notes, because tax liens helps you basically get a return on investment, and your strategy is focusing on just the ROI from interest rate. Tax deeds is helping you buy a property at a reduced price, a low price, and essentially just being able to have multiple exit strategies to execute when you purchase the tax deed, right? And so, like I said, as I wrap this up, I want to just share this with you. The tax deed investing offers an exciting path to prosperity, to wealth building, to really generational wealth. But I want you to do your due diligence, right? It's important that you understand what you're doing. You can get houses for a bargain price. You can diversify your property options. You can have multiple exit strategies. But really, it's worth exploring and worth understanding, so that when you go out to make a well-informed decision, that you're, doing your due diligence, right? Make sure that you understand: are you going to do a long term? Are you going to do a short term? Are you going to do a fix and flip? What is your strategy when you go in there? And I just recommend that you stay tuned, because I'm going to be talking about several videos about unlocking your wealth. And I'm diving into this because I'm super excited. We also have a program that we are going to potentially be launching here shortly. And the reason I say potentially is because we're waiting for our partner to finalize the deal. And if they do, we're going to be doing a certification program and teaching you how to invest through and become a certified investor. Okay, so go out there, dominate, create generational wealth for your family, because they deserve it, and so do you. I hope this serves you. I hope you go out and make your family proud.